What are my top 10 stocks, guys? Thank you for joining. Welcome to the Independent Investor channel. My name is Ryan, coming to you from New York City, New York. These are my top 10 lists. These are some of the funnest videos that I come out with, guys, but they are really offered with some caveats, all right? You're going to see, top 3, top 5, top 10, videos all over the internet, okay, especially YouTube, and you can tune into those. I watch them. I'm genuinely interested in, different stock picks that people are kind of putting out there. Very few people, if any, are talking about, the account that these stocks need to be put into. I contend with a caveat that any stock that I recommend certainly works best for you if it's contained within a self-managed Roth IRA account. Okay, guys, you can place these assets within that to make sure that you're getting the tax protection on these names that we're going to set up with a dividend reinvestment program, and any wealth that's accumulated is going to be protected because there are no fees in the self-managed program, all right? So a lot of folks, they're putting out the stock picks, but they don't tell you what account to invest in. And I'm going to be one of those first to tell you, if you're new to the channel, you're going to hear me talk about the self-managed account in basically every video that I put out with, guys, all right? Because it's really the single most important message that I want to put across to new investors. I put that information out there, guys, so you can just hit a home run right off the bat, okay? You don't have to strike out a bunch of times like I did in my investing career. I've got 25 years in the market, guys, and I can tell you firsthand, I've had a lot of success, and I've also had a lot of failures, all right? So the message that I'm bringing to you guys is really just a streamlined, evolved opinion, about where I think that your starting place should be. And the earlier you can start on the self-managed investor program, really the better, all right? And a lot of the commentary that I've been going through today, have kind of talked a lot to, how is it that we can get this 8%? How is it that we can achieve this 8%? The 8%, guys, is a year-over-year average that we're looking to get, all right? And to my previous point, it doesn't benefit us at all to pursue that 8% if we're losing part of that percent to fees, management fees, transaction fees, hidden fees, within traditional financial planner accounts, guys. We may be achieving that 8% really on the books with the trades that we're making, but we're losing that on the back end, and it just doesn't do us any good because that really will prohibit your compounding growth in the future. All right, guys, so please enjoy. This is my top 10. These are one of my favorite videos to do, just to kind of give you guys some ideas and my thought processes with regard to how we start building this account out, right? So if you've started the account and you've started to kind of populate your watch lists, I've got videos on all these topics about at least getting that account started. Now, what do we do with it, all right? And what I advocate for any new investor to look at is, how do I go about giving yourself instant diversification within that account? Let's say I've got, my first $1,000 or my first $5,000, all right? I'm gonna recommend the exact same approach for everybody. I don't care what your age is. I don't care what your risk tolerance is. You need to be picking up a diversified product right away, okay? And the two that I recommend the most frequent, all right, there's probably hundreds of other names out there, along the lines of indexing and ETFs that can provide you really good rates of return. And that's a lot of the reason why I like these videos, is because they generate, a lot of, hey, my stock is better than your stock, and that's not a good stock, and my stock got a rate of return of this, and you're not performing the market, guys. And I think we get into that way too often. I think we get into the whole, rah, my stock's better than you. And we really fail to acknowledge that I think you can win with hundreds of different stocks. You can certainly win with 1,000 different portfolio makeups out there, right? And they really have to be individual to you, all right? But this top 10 list really is my cream of the crop. If I were going to take my top 10 stocks, and I wouldn't care what your tolerance is, what your age is, wherever you go, these are going to be the top 10 stocks that I would start with, all right? However, The diversified product that I talk about picking up within that account, if you knew nothing about the market and you needed to diversify across the broad market, we always come back to investing in the S&P 500, all right? And I talk all the time, I advocate for the Vanguard products. I do a lot of cross comparison amongst different brokerage houses for you guys. And if you guys find that there are different brokerage out there, you know, Charles Schwab comes in second for me behind Vanguard. It's a distant second, so if they've changed their fee structure now, guys, they're becoming extremely competitive, and they're getting really, really close to zero on a lot of these fees. You just have to find them. But Vanguard is still number one for me. And the two products that they offer is the VOO, which is the ETF product that you can just buy within the self-managed Roth IRA account. It's going to give you broad-based S&P diversification. It's going to pay you a cash dividend. All right, so you're not going to be able to dividend reinvest in that. Now you can take the cash and buy more stock with it, okay? But it's not going to automatically roll those dividends that are paid to you back into the stock again, okay? That's just the downfall, or the feature, I guess, is for a lack of better terms, on an ETF product, an exchange traded fund. But the VOO is the one that I recommend all the time. I mean, it's pushing 15% year over year average rate of return since inception, guys. That's phenomenal. And it's also going to put that into that account with an expense ratio of 0.14 on this VOO. The other one is the VFINX, and that's going to be the S&P, still the same index, the S&P 500, but it's going to act more like a mutual fund, but it's actually an index fund that has actually performed at about a 10.94% rate of return average year over year since inception, all right? So a lot of you guys are like, Ryan, I can't get 8% off a stock. Guys, it's actually easier than you might think to get that 8% and actually outpace that 8%, because those stocks, they may go down 25%. They may go up 50%, all right? You know, on a good blue chip stock, you may see fluctuation of 10, 20% in either direction. But when you start to look at the 5-year rates of return on some of these guys, most every single one of these are up into the hundreds, 200s, 300% rate of return just after 5 years. All right, guys. So the 8% year over year rate of return really isn't that bad when we really start to digest the numbers. All right. But I don't want you to be adding these single stock allocation without looking at getting your diversified product into your account to start that fundamental account building strategy that I talk about all the time, right? And I just think, you know, by giving you the self-managed vehicle, the account to start to build these in, I'm putting you in the very best account that I can that I know about on the market, so you can hit that home run right off the bat and start wealth building and wealth preserving right from the get-go, guys. But this is my top 10 list right here. Please enjoy. You guys will recognize a ton of these, and that's a lot of the fundamental message that I put across in my videos. Investing, I had one individual ask, how is it that you research stock? You know, do you put it into Google, or you know, how do you go about approaching the market? And my answer, I think, surprised this individual. I always ask, you know, what's your cell phone carrier? You know, what's your cell phone? You know, when was the last time you took the family on a vacation? You know, and what's your favorite toothpaste? You know, and honestly, you guys might be sitting there thinking, right, but it forces you to think about things and approach investing in a different way, or look at things in a different way, okay? You don't just look at that product from a perspective of, you know, cleaning a new baby, right? You look at it and say, geez Louise, if I'm using Johnson & Johnson, how many other people are out there, right? So, but my number one holding is Apple computers, guys, and I'm just going to go through these lists. I don't do technical analysis on YouTube. There's 50 other sources that you can find that, and quite frankly, I don't default to doing that on YouTube because it's freaking boring. And, you know, I want to get this message out in 10 minutes or 15 minutes or less maximum for you guys. That way you can move on with your day and say, hey, you know, what was that he was talking about on there? I might have struck a chord for you, and that right there is the goal, the fundamental goal. Every time you tune into one of my videos, all right? Procter & Gamble, Johnson & Johnson, So one in the healthcare sector, and you can kind of understand, I do video on sector breakdown. I'm trying to get you some broad-based diversification. I can probably come up with 50 names right off the cuff, really to supplement any one of these names, right? So, you know, if you're not into a Procter and Gamble, you know, there's a bunch of other names out there that we can look at. You know, if you're not into Johnson and Johnson, there's a bunch of other options that we can look at too, all right? JP Morgan Chase, the biggest bank in the world, right? 9 out of these 10 I own. The one that I don't own is actually JP Morgan. I actually own Citigroup and Wells Fargo. That's just my current holdings now, so I want to be forthcoming with that. But I do own the other 9 out of the 10, okay? Chevron in the oil sector, it's the only one I've got right now. I'm actually a little overweight right now in oil. I've got some really intriguing names on the oil side of it because I really think that, you know, historically prices are low. And I think a lot of people are going to beat me up over that because, you know, with the fuel, you know, going to, you know, electric cars and things like that and the technology. Guys, we need oil for 1,000 other different things in our society. It's critical. It's one of our most valuable commodities, and you got to have at least 9% of your exposure in oil. All right, so there's your Chevron name. You got Disney, right? You've got United Technologies on the industrial side of the house. There's a bunch of other names, you know, that I could throw out there on the industrial side. You know, 3M, Lockheed Martin. There's a bunch of defensive names as well in the subsectors. But honestly, as a top 10, you just can't go wrong with UTX. It's actually one of my best performers this year. Pepsi, Walmart, Verizon. I'm certain that that's going to spark up. Really, it's been a real disappointment for me. I've owned it for north of 5 years. I've seen it fluctuate from the mid-50s down to the low 40s. I've bought it every time on the dip. I do get paid a fat dividend, but I tell you what, if it wasn't going to be a Verizon for me, it would certainly be an AT&T. Really a huge dividend, and I really like what they're doing with regard to their existing acquisitions that they've just finished, and the acquisitions that they're talking about taking in the future, guys. So listen, this is my top 10 list from the Independent Investor Channel's Twist. Remember the ground rules. None of these picks really exist or are really going to work for you, as I expect that they will, unless they are occurring in a self-managed Roth IRA account. Make sure that you have broad-based diversity within any one of these 2 products or any diversified product that's going to be low fee, but it's going to provide you that diversification, because there are going to be names that are invested within each of these ETFs or index funds that are going to outperform the market. And you want to have some exposure to that broad-based diversification once we start to get into the single stock allocation. But these are just some of my 10 ideas, really the top 10 for me, that I would be quick to refer to when we start building out the cornerstones of your guys' self-managed portfolios. Listen, thank you so much for tuning in to the video. If you have not subscribed to the channel and you're new to the channel, hit the subscribe button. Refer the link out to anybody that you know that's interested in investing. Leave your comments if you have comments or specific ideas about investing or stuff that you want me to address on the Independent Investor Channel. I'm glad to do that. I respond in detail to your guys' commentary. Hit the thumbs up for me, guys. Thank you so much for tuning in. Good luck in your investment future.